everyone. Thank you for joining us once again here at Seafried and Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we just want to review over some statistics about GDP and potential GDP, and also look at what the IMF came out with just this past week regarding the update to the global economy. So overall, what I want to cover here is just the difference between potential GDP and real GDP. So when we look at the chart going back, the blue line here is potential GDP, red line is the real GDP. And as you can see, sometimes we're closer to the potential and sometimes we're below. Oftentimes when we hit a time of recession, that's when we begin to come below that potential GDP and then work our way back up as we work through the recovery. And we can see this happen at all of the different shaded areas, which indicate a recession. Now, once we get above that potential GDP, what tends to happen is we start to get pricing pressures become more prevalent, and therefore inflation begins to take hold. And when we look at a zoomed in version of this chart and we look at the potential GDP for the third quarter and the actual GDP, what we find is for the first time since before 2008, we have breached that potential GDP. So we're just slightly above that potential GDP, indicating potentially that we will see an increase in inflation in the coming couple of quarters. And we'll have the actual GDP for the fourth quarter coming out on Friday, so we'll cover that next week. So when we look at this, we can say, okay, we're continuing to grow fairly strong, and now because of where we are in the unemployment numbers, we have started to produce what we maximally can, and we're overproducing now. We're just over that potential GDP. And therefore, the IMF in their World Economic Outlook, they've changed their stance here a little bit. They're saying that that economic activity continues to firm up, and that growth in the global sense, is going to be at a 3.7% in 2017, and that's up 0.1% from their fall estimate, and 0.5 percentage point higher than in 2016. So they continue to be rather strong on the GDP and how we are beginning globally to strengthen here. One of the big factors here is that the U.S. tax policy change is taken away, and that is going to implement some investments perhaps through that corporate tax benefit, those corporate tax cuts. That's an important aspect here because we need to have that corporate investment in order to have the full impact of those tax cuts in here. So that's something that we need to keep an eye on as we move throughout 2018. Hopefully we'll be able to see in the GDP numbers that equipment, that structure investment for that business. So that should be pushing us forward. Also, there are still risks in the economy. Overall, though, they're saying it's broadly balanced in the near term. However, it remains skewed to the downside over the medium term. And basically what they're saying here is because of the low interest rate environment in those and the narrowing of the yield curve, we potentially build in there some downside risks. So something to keep an eye on when we're moving in here. We see projections out 3 years where the U.S. Treasury curve continues to get flatter and flatter, and that would be indicating of a recession. But overall, I encourage you to read the full article here. Down here we have a link. I encourage you to read it. It's some really good information. When we look at their table that they put out for their projections in GDP, we can see the United States, they're looking at 2017 as a whole coming in at 2.3%, 2018 2.7, and 2019 2.5. So we continue to see them increasing their estimates as we move along in here. In fact, when we look at the October, they're up in 2018 by 0.4%, and then up in 2019 by 0.6%. So continuing that stance. For the fourth quarter of 2017, they're projecting an estimate of 2.5% for our fourth quarter GDP. That 2.5% is pretty far under where the Atlanta Fed puts their GDP Now at a 3.4. The next release of the GDP Now is coming out on Thursday, a day before the actual release of the estimated fourth quarter GDP. When we look at Bloomberg and the economists on Bloomberg, their consensus is at a 2.7% GDP for the fourth quarter. They have a range in there from a 1.7 to a 3.6. So we have a pretty wide range, anticipating somewhere around that 2.7 would fall between the IMF and the GDP Now. So that's what we have for you this week. Next week, we'll look at the fourth quarter GDP, look at the different components, and see how everything has come together in the fourth quarter. Looking forward to see you next week. Enjoy.